Hi everyone, this is Jitan here and welcome to another episode of TradersTV. In the last episode, we talked about understanding Forex market correlations and how to use different correlations in the market to your trading advantage. In today's episode, it's actually a special request from one of our viewers, and we're actually going to be looking at how to trail your stop loss to achieve better profits. So let's get to it. Okay, so how to trail your stop loss for better profits. Very interesting question. And really, one of the key things about training stop losses and adapting whatever method you're using now is that it can only get better through experience, because there is no one way that is going to work all the time in all market conditions, across all strategies, across all time frames. Too often I find the retail community want to have just the one approach that fits everything. And they want it to work on currencies, commodities, indices. They want it to work on the daily chart, the 4 hour, the 1 hour, the 15-minute chart. And there's just not anything like that out there. Okay. However, if we just analyze a few little bits of information, we can start to identify the best approach in actually how to trail our stop loss to get better profits and to get that larger move. So let's have a look at this. So there are various different ways to trail your stop loss. First of all, you can pretty much do anything that you want. Your approach, however, will depend on a few things. So let's have a look at these, and then we'll have a look at some charts in a moment and have a look at some recent examples on how I trailed the stop loss and the reasons why. So the first thing is this: what is your strategy purpose? So what is the market condition you are trading? If you're trading a consolidation and the market is moving sideways, then if you're going to sell here or sell here and target the bottom range, then is a trading stop loss really going to be the best solution? Because it's in a consolidation, the market isn't trending. Okay, so price action and the cycles are going to be quite erratic. So trading a stop loss within this kind of market condition isn't really going to be the best approach. Yeah. Having a fixed reward to risk target or a fixed level, just having a fixed level to get you out of the trade or to move your stop loss to a break-even point, they're going to be the best things to use. Because in a consolidation, we don't know how the market is going to trend. I mean, we never know, but at least in a trending market, there's a higher probability chance that we're going to get higher highs and higher lows, because that's what a trend is. So then this makes it a little bit easier to use trailing stop losses, okay, because we're in that type of market condition. So the first thing is this: you've got to understand what your strategy purpose is. So what is the market condition that you are trading? Because that's going to be an important distinction in how you're going to manage the trade and whether actually a trading stop loss is even going to be a good solution for you. Just because the title of this is how to trail your stop loss with better profits doesn't mean that it's going to work in every single market condition. Because some market conditions, like a consolidation, or if you're trading within a symmetrical triangle, for example, a trading stop loss isn't even the best strategy to use within these consolidation patterns. Okay, so the first thing you have to ask yourself is, what's the market condition you are trading? Yeah, so your strategy purpose. The second thing is this: what is your comfort zone of trade length? Because it's great to try and trail your stop loss to go for that bigger move. But if you're used to trading 5-minute charts or 15-minute charts and 90% of your trades, you're in and out within a few hours, it's going to be very difficult for you to trail the stop loss on the daily chart and be in that trade for weeks, if not months. It's just not going to happen. However much you have the best intentions, you have not built the habit in that way. In fact, your mind and your experience is used to having quick winners. If you're trading on a 15-minute chart and being out within a few hours, so that's what you're used to. That's what your brain is comfortable with. That's what your body is comfortable with. That in the back of your mind is your sense of expectation. So it's going to be very difficult to trade a shorter term time frame, yeah, and then go to a longer term time frame. Even when you are experienced, yeah, you can get conflicted. You need to have a whole routine around trying to separate the two different styles. So for me, I've got kind of a different, I trade in different environments depending on what I'm trading, so day trading or some longer term trading, swing trading. I have different accounts. Yeah, my charts look a little bit differently as well, because I need to separate it, because otherwise you get too used to just gelling things together. So you'll get too used to the shorter term moves, you see a longer term move, and you're trying to go for that bigger move, and you just keep wanting to do something with it. You find it difficult to keep just trading your stop loss, because you're fearful it's going to come around, because you're just used to very short term trades, right? So you have to find what your comfort zone is. And with trading, I think within this respect, it's okay to be in a comfort zone, to do something consistently. You want to find your comfort zone and you want to stick to that, because consistency is more important than breaking new barriers in the trading world, or conquering your fears and conquering other things. So your strategy purpose is going to be important to the market condition, but also what you're already doing is going to be very important as well. If you're a very short-term trader and you're trying to go for a bigger move, then it is going to be difficult. Okay, so some people have a balanced approach with different accounts, short-term account and a swing trading account, and that can work quite well. But just understand what is against you depending on what you are doing right now. Some of you are already swing traders, and trading your stop loss will get a bigger move, perfect, because you're not trading throughout the day, you're looking for those bigger moves, you're a bit more patient, and you're happy just to be patient. Okay, but if you're a hardcore day trader and you're looking to hold trades for weeks and months, it's not that easy. All right. So the third thing is this: where have you entered within the bigger time frame? So let's say this is the trend of the weekly chart. Okay, and you've entered here, right at the top of the market on the daily chart, because remember, the daily chart will be cycling, making higher highs and higher lows in accordance with the weekly trend. Okay, so like your blue line will be your daily cycles, and your purple line here is like your weekly trend. So if you're entering right up here, phase one on the weekly chart began all the way down here, yeah, and so phase one began all the way down here, and you're entering up here. Do we really want to have a trailing stop loss on this? Yeah. If we are going to have a trailing stop loss, are we going to have a trailing stop loss on the weekly chart, or are we going to put it on a daily chart? Well, in this respect, you can only put it on the daily chart because you're so far already into the move. If you entered on the daily chart all the way down here and you're at the beginning of a potential phase one move on the weekly chart, then trailing your stop loss on the weekly chart can be quite effective, because then you can get the bulk of the move. So it depends where you are in the bigger time frame. Okay, so this could be, I've just gone for the weekly chart, the purple line, and the daily chart is the blue line, but the purple line could be the daily chart and the blue line could be the 1 hour or the 4 hour chart. It's the same principle. Yeah. Depends where you are in the bigger time frame cycle to understand what time frame you should be looking to trail your stop loss on, right? Or even think about moving your stop loss. So this is going to be an important one, and again, it comes down to your strategy as well. Of course, right now we're moving into just trend-based markets, because we already know trading stop loss only work in trend-based market conditions. If we're in a consolidation, then there's other better management techniques than trading a stop loss. So the fourth one is this: where have you entered within the trading cycle? So we just looked at that as well. So within the trading cycle, where is your strategy getting you into the market? Okay, so you may have, let's say this is the daily chart, you've got a nice trend, but your strategy might be getting you in the middle of this move here, right? Well, once you're in the middle of a move, there's a high probability chance you're coming close to the end of the move. Right? Some people's strategies can get them into the beginning of a phase one move, in which case a trading stop loss is great because you've got the bulk of the move. But if you're getting in, late, or when phase one is already extended, then is a trading stop loss the best thing? Yeah, it could be, and it depends on these other scenarios. But where you are in the bigger time frame, these two are connected. Where you are in the bigger time frame and the trading cycle, they're connected. Right, so just understanding where you are at the beginning of a phase one move? Are you coming to an end of a phase one move? And where are you in the bigger context as well? All right. So what is happening in the rest of the market? You know, if you're buying Aussie against the US dollar, yeah, but Aussie Swiss, Aussie Yen, Aussie New Zealand, they're all going down, Aussie CAD is going down, then are we really going to get the strength that we need in Aussie dollar against the US to get the high probability trade on a trading stop loss? Okay, of course it depends on what's happening in the US dollar, but this comes back down to the strengths and weaknesses. Yeah, strength and weakness is quite important to understand, because if we had all the Aussie crosses going up, then I'll be happy to put a trading stop loss on the time frame I'm trading or the time frame above, because if everyone's buying Aussie, then that trend is going to last for quite some time. But if people are only buying Aussie against the US dollar and they're selling Aussie against everything else, then maybe this trend isn't going to be as long or as large as I think it's going to be or want it to be. So maybe I'll just go for a fixed reward to risk target, come out the next level of resistance or support or something like that. All right. So understanding what's happening in the rest of the market is very important. So once you've kind of answered these 5 different scenarios, obviously the next thing is, okay, how do you trail the stop loss, and you know, what do you look to do? And for me personally, I only use one type of trading stop loss, okay, and that's trailing my stop loss, yeah, beneath the low of the bar, if I'm long, and trailing my stop loss above the high of the bar if I'm going short. I don't have a 15 pip or 20 pip trading stop loss because the number's arbitrary. I look at the specific market and I trail my stop loss, and depending on the bar. Right, so we'll have a look at an example of some recent trades where I've trailed stop losses and things like that, and kind of how we will look to do that. All right, so let's just have a look at the SmartCharts platform. So here's a chart of the Nikkei Japan 225, something that we've been trading for quite some time actually. And what you'll notice is here, I'm just going to start with our entry first of all. Okay, we entered the trade here. So according to one of our strategies that we teach on Learn to Trade, we entered the trade here, and you know, we're looking to buy. Okay, we're looking for further upside. Now, in this scenario here, what's going to be the best approach? Should I trail my stop loss to every buyer bar that I get, which is a technique that I use? Yeah. If you trailed your stop loss to every buyer bar that you had, then you would have got stopped out here. So pretty healthy profit there. Okay. You know, you're entering here on the income wave, and then you're getting out here. So again, that is a very healthy profit to be had. Yeah, a very high reward to risk. That's trailing your stop loss to every single buyer bar there is. So that is one way to do it. My preferred way is to trail my stop loss to every 2 buyer bars. So I like to give it a bit of room if I'm looking to do a swing trade. Okay, so every 2 buyer bars that I get within a trend, yeah, then that's when I'll be looking to trail my stop loss. So effectively, then you will be getting pinged out on that spike there, right? So again, another high reward to risk trade by trailing your stop loss to every 2 buyer bars that you have in the trend. So every 2 consecutive buyer bars, then I'll move my stop loss to the low of the first buyer bar. Then I just wait. Whatever the market does, I wait for the next 2 consecutive buyer bars, and I move my stop loss to the low of that bar, right? And that's what I'll be looking to do all the way up. So in this example, kind of entered here, you know, you've got 2 buyer bars, your stop loss will move from here to there. You get 2 more consecutive buyer bars, your stop loss will move here. You get 2 more consecutive buyer bars, your stop loss will move here. You get 2 more consecutive buyer bars, stop loss will move here. You get 2 more consecutive buyer bars, stop loss will move here, then it will move here, and then it will move here, and then finally you get pinged out there. Okay, now of course we have picked a trending market. Now this is one that you can look at on a daily basis, but of course you're in this trade for some time. If we look at the high time frame, so remember what the key questions we need to be asking ourselves: what is the strategy purpose? So we're looking for, you know, this is a trending market, yeah. You know, we're above the moving averages. We have a higher low and a higher high, so we're looking for a trend. Yeah, we know what our comfort zone is. We know what's happening with the rest of the market at this point in time. Global stock markets were going up, which is good. You know, we've got global stocks going up, so global risk. People are happy to take on risk during that period of time. And also, one of the key things that we don't know yet is where are we in the bigger time frame? Because remember, we're executing here on the daily charts. Yeah, we're executing on the daily chart, so we need to be understanding where we are in the bigger picture. So on the weekly chart, where are we? Well, what you'll notice is on a weekly chart is that we'll be entering the trade here. So if you think about phase one started here, if we look at this trend, okay, phase one started here. We're pretty early on within this phase one move, right? There's at least a very high chance we're going to go and test those previous high points, which is the all-time high, yep, and at least break through that. So one scenario is to try a stop loss on the weekly chart, and you can see when the market trends, I mean, arguably you'll still be in this if you would be trending your stop loss on the weekly chart. But you can see here that on the weekly chart you tend to get some decent trends when the market does move, right? So that is one potential scenario. So 3 potential scenarios there on trading stop loss, but of course we've got the right market condition to be able to trail a stop loss because we're picking a trend-based market, and really the market is really the most important part of what you're looking to do, identifying the right market and then adapting the right tools. So obviously the platform makes it a lot easier, so the Smart Charts platform, because it already throws up some potential trade signals. So all I need to focus on is then, okay, how much potential reward is in this? You know, how do I want to manage the trade? Yeah, there's some automatic trading stop losses here and things like that in terms of the functionality, but I'd like to actually trail my stop loss manually before each bar, okay? And you know, you have kind of different functions to do that as well, all right? So that's kind of my 2 pence, and that's how I'll be looking to trail stop losses, and this is just one potential example. So I hope you found that video to be of use. If you're looking for a little bit more information on how to get started in the Forex trading world, then I strongly recommend you click the link below and attend one of our free Forex trading workshops. You should also stay tuned for all the latest in the video series by looking at our playlist and getting up to date with the past episodes. Next week, we're actually going to be talking about more technical analysis and more advanced information to help you on your trading journey. So stay tuned and I'll see you next time.